In this video, I'm going to be confronting Saj Hussain. He's a millionaire from property investing. He's a property entrepreneur. He's also run businesses. I'll be asking all those awkward questions that you want to know. Let's go. Saj Hussain, first question I want to ask you this. You got on my YouTube channel. Are you a millionaire? And are you a millionaire from property investing?
I've done very well out of property.
But why won't you say if you're a millionaire or not?
Yeah, so my portfolio is in the millions.
Okay.
Yeah. Not in the tens of millions, but in the millions.
How old was you when you bought your first property?
I only started in property about 15 years ago, and I didn't buy anything for the first few years.
How old are you now?
I am just turned 52.
You look good.
Thank you very much.
37 was you when you bought your first one?
Yeah, probably late 30s before I bought my first one.
Investment property. You obviously owned a house that you lived in, right? Because that's pretty late, I would say,
Yes.
to get into property investing. What made you do that?
It was a buy-to-let that I did as a profit share with someone.
Oh, so you actually done that with someone else?
Yes. So I earned an amazing, I think it's £47 a month from that house.
Most people are pretty useless there when they buy single buy-to-lets. It's very difficult, especially now, isn't it, to actually make profits from that sort of property investing. How many properties have you got?
Quite a few.
Give me some numbers. Come on, this is
So
what people want
about
to know.
250-ish tenants.
You've got 250-ish tenants.
Paying rent every month, yeah.
And these are
well,
multi-lets,
I say paying
are
rent
they?
every month. There's a few that are currently not paying. Yeah, there's quite a few multi-lets. Multi-lets being our core portfolio.
So this is like a HMO?
5-6 people per house, yeah.
And what sort of, are they like smart HMOs? Or
Very high end, yeah.
Is that the strategy you believe is now working?
That has been working for us. But I think property is not a fixed thing. It evolves and changes, and it has over the years. And
everything's innovating.
We adapt. I think that's key. So for those, someone's going to get into exactly what we're doing right now, I wouldn't suggest they copy exactly what I'm doing or what I have been doing, because market evolves.
So when you say high-end HMOs, are these, so this is a single room, but has it got an ensuite with?
Yeah.
So everyone has an ensuite.
So we spend about 120 grand on each house.
Wow. Okay. And all round Birmingham, is that right?
Around Birmingham, yeah.
Have you ever thought about branching outside of Birmingham?
When I started in Stoke-on-Trent because I heard that was the cheapest place to buy houses, and they were a right thorn in my side.
Have you still got them?
I've got one left still.
Are you a buyer and keeper, or are you prepared to always
No,
be fluid and sell?
Both. I think it's important to have high cash flow properties that you keep, that no intention of getting let go of at any stage unless they started to perform badly, and then be always trading, adding value, selling. So that I see them as two separate businesses that support each other.
How much money do you make per month from your property portfolio? Don't give me some woolly answer.
I
actually want to know.
I do very well. I do very well.
Not what my viewers want to know.
I drive a nice car and live in a nice house.
More than 10,000 a month?
I don't spend.
Saj, more than 10,000 a month?
Yeah, quite easily.
Wow. How many years did it take you to build up a property portfolio that's more than £20,000 a month?
Probably close to 10 years. It was a rough journey. So
you're now doing about, would you tell me what your rent is? I'm not asking how much money you'll make, but what's your rent? Right, I'll tell you mine, £550,000 a year. People can find this
stuff
stuff
you do
out.
The sums, we typically charge between 350 to 550.
Well, I don't want to do the sums, I want you to tell me.
It's a good income. What's the significance?
It's like years.
When I first started in property.
Within 10 years.
When I started in property, the first question I wanted to ask anybody I met was, "How many properties have you got?"
Yeah, well, I don't care about that.
But what's the relevance? What's the significance? Why is it even important?
I want to know what your rent roll is, because I want to work out what your cash flow is. And I think people are watching this want to be inspired. But I think you've got a very inspirational story.
I'm not selling. Business is not available for sale. So why are those numbers important?
Because this is an educational business for a business YouTube channel for entrepreneurs and business owners. And I think I'm actually proud of business owners that generate wealth, that pays for doctors, nurses, police, and I think we need more people like you. And I think when people watch this, I mean, bloody hell, this bloke in 10 years has built up, I'm guessing in excess of £250,000 worth of rent a year from scratch at 37 years old.
I was a late starter.
Yeah. How much money did you start with?
Zero.
So how did you? So you've done the first one as a joint venture. How did you acquire that first one with zero money?
So what I did when I first got into property is I started looking at a lot of different things. But the thing that worked quite well was sourcing property, finding property deals, bit of a discount on the property and offering it to somebody else. So essentially selling the deal on. Really, it was just a glorified estate agent. That's all I was doing. Yeah. I was running around finding a deal, negotiating.
Save that money up.
2-3 grand at a time. Sometimes you hit a nice one, 5-6 grand. you might earn on it, and that was it. That's what I was doing.
And you saved that
because
up.
I wasn't saving it. I just need to keep a roof over my head because I was kind of.
But how
skint
did
at the
you
time.
acquire Saj's first one?
So I found a deal that someone was going to get repossessed. They were about to lose a house. I'd been talking to them for months. I had the deal all structured for somebody else to buy it, and what I'd worked out as figures, the buyer was not comfortable that those numbers are going to actually stack up. But he'd purchased property from me before. So what we did on that first one, I thought, look, if we don't do this deal, this guy's going to lose a house. He's not going to be in a position to be able to move forward his life very easily. It's a good deal that I think the buyer would lose out on. And I've spent months trying to put this deal together and make it work. And I'm not going to have anything to show for it. So essentially I said to him, look, if you buy it and it delivers these numbers, then just share the rent.
Right, so he bought it, but you got a share of the
So
income.
he didn't pay me any fees for it. So
when
I
did
got
you
it up
buy
and
your
running.
first one?
So
How did you do it? Well, how much money did you put into it? This is what people want to know.
So what
wanna
I
know it.
figured out at that point is I don't need to put money into property.
So do you not own anything yourself?
Yeah, I do. But it all started with not putting any money
So
into
you was
property.
doing rent to rent in a way.
That came later. I started doing rent to rent as well.
So you used joint ventures and strategies
Yeah.
before you had enough money to buy your first
What
one.
I understood was if I can find value, somebody's prepared to bring money to share that value. That's really where the penny dropped. And it was just versions and variations of that.
Do you believe in the... I don't think rent to rent is a great strategy. I think owning the properties is a much better strategy because I think a lot of people are committing mortgage fraud through this strategy of renting a house off of... someone is.
Yeah.
Because I think if I went to my bank and said, I'm renting off of this landlord and I'm going to turn it into a HMO, I don't think many banks are very keen on that.
So I think there are strategies that are better and worse for somebody depending on where they are. I think rent to rent is a good strategy if it's done in the right way.
What is
so
the
for
right
example, you just said you're taking a family house that might be on a residential mortgage and you're turning it into a HMO. Of course, that's against the lender's rules and breaches their mortgage terms. But if you take an existing HMO that might be tired and not performing as well, it's probably on a commercial mortgage, may not even have a mortgage, and you take a lease on
if
that.
it hasn't got a mortgage and the person owns it outright, that's very different. That's very different, but not a lot of situations like that.
Actually, if you look into the number of properties that are owned debt-free in this country, they're quite staggering numbers. And so landlords, for example, when I was at university, late 80s, early 90s, and those properties that we used to live in, I mean, when I think about it now, they're a bit of a dump. We used to call them digs.
Awful.
And compared to what we create now.
Student accommodation.
And I guess some of the
wonderful
parents are more affluent as well, and they want little Johnny to live in a really nice place and not be uncomfortable and stuff, or whatever it might be. But the point is, the people who were buying property then, they would have paid the mortgage off after 15, 20 years. That was 30 years ago. Many of them are still sitting on those properties. But what they've done, they've taken the income, but not invested back in them.
Yeah, I'll tell you.
They become quite tired, and then they can't understand why the current customer doesn't want that property anymore.
Yeah.
So those are perfect properties to turn into a rent-to-rent, where you go in and you repurpose the existing product
And
to
are
a
you
new
doing that
marketplace.
now?
I'm not actively doing rent-to-rent now, unless an amazing deal comes along, we'd still take it.
So your strategy
not
is now to
marketing for
buy and own, is it?
Yeah, and to sell some as well. So it's one
put
strategy
in
is to hold, one property is to develop and sell.
But if you was doing student accommodation now or a HMO, you would rather own the asset on
definitely.
a mortgage and then do what you do.
Yeah, but if I was starting again from nothing, and let's say I didn't even have the knowledge I have now, then rent to rent is a better starting point if you're prepared to put the time and effort in and do it properly and build a small portfolio. A small portfolio could be 5 or 10 houses. We're not talking hundreds of houses. Then that gives you a solid income. The reality is you're becoming a property manager, you're becoming a letting agent.
Yeah.
That's what you're doing.
Yeah, absolutely.
But it's a very well-paid position
But
if that's what you need.
and I spoke from experience, I've owned some of my properties and rented them to someone else that's done that strategy.
Yeah.
It was a mitigated disaster. I just took it back from them and then just turned it into a single let.
I think the mistake that's generally made is the people that go into it do it purely for money. They're not thinking about this is a letting agency business. You're building a model where you're looking after property and you're doing value add. That's what you're doing.
Yeah.
But those that approach it from the point of view, I just want to extract money and I'm going to get £1,000 a month, I'm going to be rich next month. They're the ones that mess it up.
So let me ask you a question. You've got £1 million. Theoretically, I'm going to give you £1 million. Are you going to go and buy a property outright, or would you go and get mortgages and leverage up?
I would probably put it with investor money.
What do you mean by
And
that?
so what I'd add more to it with other people's money into it. So it's a form of leverage. It's not bank money
Like
necessarily.
peer-to-peer lending type
It's
thing.
private money, for example, you're putting in so you can do something bigger. So I'd be wanting to do 20 to 30% return on that money in a year.
So you would build houses and sell
build,
them.
develop, add value. That's where you're going to do that. On
And
rental,
is that what you want to do now, rather than just buying, holding property and renting it out?
I still want to do both. We're building houses.
If you can make
as well.
20-30% rent just selling houses, why do you want to?
Because it's a trading business. That means I've got to show up and work. The other business
That's a
is
good
a
answer.
passive.
That's
That
exactly.
just throws
Can I just
cash
say,
at
Saj, that would have been my answer, and I'm glad that you said that. Now I like you more now.
They're different businesses, and that's the way I see it. They're
Yeah.
all related but different.
Yeah, so I call that fast pounds and slow pounds. So your trading businesses, your fast pounds, but you want to have slow pounds that work, but they take time to build serious cash,
Yeah.
don't they? Yeah. How many properties have you bought in any single 1 year, quarter, month? Have you ever done something truly sexy and interesting?
The most we've been developing at any one moment in time has been 9 houses in 1 month.
That's developing, isn't it?
In the terms of we bought them in and developing them in that month. And that was, if I remember correctly, before the stamp duty change happened, not this time around, previously. But that was not great, because I think we'd kind of stretched ourselves a little bit too far to do that. We were just, that's a deal, grab.
Have you got a good relationship with the bank that helps you?
Yeah, we've got a decent relationship, but I'm not loyal to a bank. And
How many banks do you use?
Whatever there's a decent deal. And I don't believe that actually banks would necessarily be loyal to us as well. It's a fair relationship. You know, they've got something we want. They're happy with us as a client. We work. And I think that comes from when I first got involved in property, it was 2006, 2007. That's kind of when I first really got interested. And the number of people I'd sit down and talk to, they had a commercial mortgage portfolio where they had maybe a mortgage over 10 houses. The banks were calling in good loans. They were destroying businesses. And I guess that's where I get these views from about banks and how they've treated people in the past. I don't think they're any different.
So do you lend people money?
No.
Do you borrow money from private investors?
Yes.
What sort of interest rates do you have to pay?
I'll borrow money from about 6 to 16%, depending
Per
on
annum.
what per annum, depending on what structure it's at. So what I mean by that is, let's say they're paying for the first chunk of purchase, i.e., like what a bank would do on a first charge. That's at the lower rates, it's highest form of security, lowest return. Then there'll be the top-up type equity.
So do you know someone that would lend you £500,000 to just do what you want in property as long as you pay them 1% a month because they trust you?
Yes, quite a few people.
So you just say, look, I'm going to buy a little portfolio, I need £500,000 quickly, then I'll remortgage it and pay you back, and they just trust
If I had the deals there, I could do that. I probably wouldn't do massive amounts, but I'd be able to do that. But the thing is, finding deals is important. And one of the things that we haven't really talked about is property just moves in cycles. And where it is at the minute, price is very high, demand is very high. There isn't much stock out there. So even though there's plenty of cash around right now, people are sitting on huge amounts of cash. I get calls all the time. We've got some money. What deals have you got?
So you know lots of people with cash, let's not call them property investors. They've got the cash sitting in the bank. They'd rather give it to someone like you to put it to work rather than them put it to work.
It depends on where people are. So, for example, one of the things I ask when someone's looking to invest with me is, why do you want to invest? What is it that you're trying to achieve? What's the outcome they're looking for? And that will vary. So some people say, look, I just want a steady trickle income. Some of them, it's the case, I'm trying to build something for long term. So I have quite a few people from the medical field, doctors, dentists, people like that will invest with me. They don't need the cash right now. They're on very good salaries. They're probably being taxed to the hilt at the minute anyway. They're just trying to build something for the future, just so it can make their life easier. But whereas somebody else, for example, an example I think was a teacher that invested with me previously. He was on a modest salary, but he really enjoyed his job. He inherited some money, and he was saying, look, I just want to have an extra bit of income so I can just do what I enjoy doing, because I can't really live off what I'm earning.
Do you still think residential property investing, should I say, is still a good idea in the United Kingdom?
Yes, but it depends why you're doing it. So, for example, if you're doing it because you want to earn a modest return, and it'll be a very modest return each year, but you're looking for long-term capital growth, which is why most people invest in residential property. When you look at any of the historic charts, it just goes like this over time. And your belief is long-term, it'll be worth substantially more than it is now. That's why you'd invest in residential property. You're not going to generate income out of that.
So I asked you that £1 million question, and you said go and build off a portfolio, build some houses. Putting that aside, but if you had £100,000 to invest, and I'm not letting you now go and build and develop, I only want you to invest it in buy-to-let traditional stuff. I don't want to phrase the question like that, actually. I just don't want you to go and
Where
build
would I
houses.
put it in buy-to-let?
Because most people just think, well, I ain't going to say I ain't a builder, I ain't going to go and build 9 houses. I want actually, someone's got some extra cash.
Yeah.
What would you do with it that most people could do better than most people?
Okay. So I think there it is buying traditional property, but more at the high yielding end.
And how do you find those high yielding properties?
So you either go where most people don't want to go, i.e. we're talking about a place like
the northeast of the
the northeast, but even around the Midlands, there's places where you can buy really cheap property. But often it's places where people want to get out of rather than move into. But those aren't always the best places. But you get the peripheries of that sometimes that work quite well. So you just have to be very careful where you invest. And if you invest in those kind of places, you'll hopefully get a decent-ish return, but some decent capital growth. If you buy the cheapest property, you're not going to get capital growth. So if I look at my Stoke-on-Trent
that's good. Yeah,
they're not worth much more now than they were 10 years ago. Recently, very recently, about 35, 36, even 39 grand, maybe 40, 50 grand.
Really? And what do you get rent from that?
Rent is quite decent on those, about 550, maybe
a
1,600.
Fantastic yield.
It is, but I know we can do more with those. And
is that just on a standard AST one family?
Standard AST, but what you've also got to remember is sometimes the type of tenants you'll have more issues with them. More likely not to pay, more likely to be damages. And we're very good at how we manage our property. And sometimes people say, how do you do it so well? I said, we don't do anything other than just be careful who we put in the property.
Yeah. So would you sacrifice yield for an easier life?
Yeah.
Yeah, I've learned that.
Yeah, it's the
same with business as well.
80% of your time will get sucked into that 20% that just causes
I always
so
say
much
that
hassle.
The higher the return on investment, usually the higher the problems.
Yeah. So for example, we run some service accommodation units as well, a good couple of hundred units that we have there, and there the return is very high. But then it's another operator business. It's very hands-on. It's literally like running a hotel.
Yeah. It's not an investment, it's actually like a trading business.
It's a business.
Yeah, really interesting. I want to ask you another thing. Does interest rates, when we're borrowing from banks, not private investors, does that worry you, concern you? Do you think they're going to go up in the next few years? Do you think we're going to be at this low rate for the next 10, 20 years? What does it concern you?
When we're doing calculations, I traditionally always used to do stuff at about 6% to work out if we borrow money at 6%, where would we be? Because that's really historically
the 300-year average, yeah.
But we look at now what's the base rate, 0.1%, and you borrow money at 2, 3, 4% at some commercial stuff, and you think yes, make hay while the sun shines, but it isn't going to stay like this.
Do you think it will go up?
I think it will go up, but I think we're probably okay for 2 or 3 years. I think even the Bank of England hinted they don't really want to change much for the near future.
If he was a guessing man, calculated,
yeah.
In 5 years' time, what do you think base rate will be?
I think that's too far in property terms. That's way too far. In 3 years, I think we'll start seeing movement.
To what?
Yeah, maybe 2-3 type percent. I don't think
so. Only be 0.5% above base.
Yeah, a little bit more than where we are now. Yeah. Because
I tend to agree. By the way,
if you look at the property market in the this time last year, most property people think we're in for a big crash. Market's going to collapse. With the pandemic, the world's going to end literally. But the government can completely change where things are going.
Yeah, it's all
because
down
they're
to
pulling
them,
so many levers. And the amount of money they're putting into the market, 95% mortgages, interest rates, kind of tiny amounts, all this has fueled the property market.
And if there is a property crash, I don't know why, it's this little conspiracy theory in me, that's not going to get them votes. And I feel like they will always answer that. And it's just the way I think. I've enjoyed interviewing you, Saj.
Thank you.
I think there's some sort of stigma around property investors that are open on YouTube and sort of say who they are and what they do. And I think you've been quite protective on some of your answers. I hope I
think you did an amazing job in terms of being open and complete and transparent. The way I see it, we still run it. It's a business that we run. And yes, you share a lot of stuff that will help people. You don't need to share your whole entire life.
That's what people want to know, isn't it? So there we
They've
go.
got to draw my inner circle for that.
Yeah. Oh, is that what they're going to do? Well, there he is, Saj, doing a little plug there for us. And you can check out his YouTube channel. It's fantastic. He goes through all different property strategies. Make sure you like and subscribe to this YouTube channel. And I'll see you in the next video. Bye-bye.